All right, crypto fam, welcome. Have you ever stared at a cryptocurrency chart and it just looked like a confusing jumble of lines? Yeah, we've all been there. Well, stick with me because in the next few minutes, we are going to completely demystify this stuff. We're going to learn how to read the story that the market is telling. Let's get right into it.
So, are you ready to finally turn those squiggly lines into something that actually makes sense? Look, the goal here isn't to get a crystal ball and predict the future, okay? It's about learning to read the information the market is giving us right here, right now. By the end of this, you'll have a solid roadmap to understand price movements. Let's begin.
Okay, let's dive in. First, we need to completely reframe how we look at these charts. Instead of seeing complex, scary data, I want you to think of a chart as a treasure map. Seriously, it's a visual story that shows us exactly where the price has been and reveals all these little patterns in what the buyers and sellers are doing.
Every treasure map needs coordinates, right? Well, the horizontal line running along the bottom, that's your x-axis. And all it represents is time. That's it. Think of it like the chapters in our story. You can set it to show you what happened in minutes, hours, days, you name it.
And that vertical line going up the side, that's the y-axis. Super simple. It's price. So as time moves from left to right, the chart shows you how the price moved up or down. And when that line is climbing, hey, it's party time. And when it dips down, nah, don't worry, that's just a plot twist in our adventure. This simple relationship is the foundation for everything.
So, now that we've got the map's layout, let's look at how the action is actually shown. Most charts use these things called candlesticks. Each one is like a little packet of information, a snapshot, telling you a whole story about what happened to the price in just a single period of time. They're the life of the party. And there are really two main types of candles you gotta know. First up is the green candle. That just means the price closed higher than it opened. We call this bullish. The buyers totally won that round. And the red candle? Well, that's the opposite. The price closed lower than it opened. That's bearish, and it means the sellers were in control.
Now, if you look close, these candles have two parts. The thick, colored part is called the body. That shows the main battle between the opening and closing price. And those little thin lines sticking out, those are called wicks. They show you the absolute highest and lowest prices the party reached. And get this, a really big, fat green body? Oh yeah, that means there was some massive bull energy in the market.
And hey, keep an eye out for something interesting. You might see a candle that looks like a little cross, with a tiny, almost non-existent body. That's called a doji. When you see one, it's basically the market shrugging its shoulders. It's a sign of total indecision. The opening and closing price were pretty much the same. A doji can be a huge signal that the momentum is about to change, so you definitely want to watch for those.
Okay, let's zoom out a bit. When you see a whole series of candles, mostly green ones, just climbing higher and higher, making higher highs and higher lows, that, my friends, is an uptrend. It's a beautiful, clear picture that buying pressure is strong and the bulls are in control.
During an uptrend, you'll often notice the price will fall to a certain level and then just bounce right back up. It's like it's hitting an invisible floor. That floor is what we call support. It's basically an area where there's so much buying interest that it acts like a trampoline for the price.
And the opposite of that floor is an invisible ceiling, an area the price struggles to break through. We call that resistance. But when the price finally smashes through that ceiling, that's called a breakout. And traders get really excited about those, especially if you see a big spike in the trading volume at the same time. That can mean the rocket is getting ready for launch.
Now, what happens when the chart is mostly red? Well, a series of lower lows and lower highs. That's a downtrend. It means the sellers are in control. But listen, while it might look scary, understanding how to surf these red waves is just as important as riding the green rockets. This is where big opportunities can hide.
So in a downtrend, you'll see that invisible ceiling, resistance, in action. The price will try to rally up, but then it'll hit that level and get pushed back down. That's a spot where the selling pressure is just too strong and acts as a cap on the price.
Here's something to remember. Uptrends and downtrends are just natural parts of the market cycle. The market breathes in and out. It doesn't just go in a straight line forever. In fact, many successful investors look for their biggest opportunities during these downturns. The real skill is just being able to tell what part of the cycle we're in.
With all the little ups and downs of each candle, it can sometimes feel like you're on a bumpy road, right? It's hard to see the big picture. Well, to help with that, we use a tool called a moving average. Think of it like a GPS for your chart. It smooths out all that noisy price data into one clean line, just showing you the general direction of the trend.
Now, there are two common types. You have the simple moving average, or SMA, which is the classic average price over a period. Then you have the exponential moving average, or EMA. The EMA is a little different. It gives more weight to the most recent prices. That means it reacts faster to changes, which can sometimes give you quicker signals.
Okay, this is a big one. One of the most famous bullish signals out there is called the golden cross. It's super simple. You have a shorter-term moving average, which is like a fast country road, and a longer-term one, which is like a big highway. When that faster, short-term MA crosses above the longer-term one, well, that's often seen as a huge signal that the trend could be turning bullish.
So what settings should you pop into your GPS? Well, a really common setup is to use the 50-day moving average for the medium-term trend and the 200-day moving average for that huge big-picture view. And when that shorter-term 50-day line crosses above the long-term 200-day, that right there is your classic golden cross. When you see that, it's time to pay close attention. And just like that, you've got the fundamental building blocks of reading a crypto chart. Look, this isn't about becoming a trading master overnight. It's about taking that first crucial step from being a confused beginner to an informed observer. Your real learning journey starts right now. So let's just quickly recap the new toolkit you've got. You can read the treasure map, you know your axes, you can decode the candlestick parties, you know how to spot the green rockets and surf the red waves, and you've even got a crypto GPS with moving averages. You now have the foundation to go out there and keep learning.
So I'll leave you with this final thought. You now have the basic literacy to read the story the market is telling you. Every candle, every pattern, it's a new sentence in the narrative. The more you watch and the more you learn, the more fluent you're going to become. And what if that next chapter you learn to read is your 100x gem? Thanks for joining us. Welcome back, Moon Fam. You made it to part 2, the advanced class. In part 1, we nailed the basics of candlesticks and volume. Today, we're taking it to a whole new level. We're going to dive into the exact tools and techniques the pros use to get an edge on the market. By the end of this, you'll be spotting opportunities you never saw before. Let's get right into it. But hold on. Before we jump into the pro-level stuff, if you're getting value out of this, do me a huge favor and smash that like button and subscribe. It takes you 1 second, but it tells us to keep making more of these deep dives for you. Seriously, thank you for the support. All right, let's keep going. Okay, first up, let's check the price speed. Think of a crypto's price like a race car, just flying around the track. Sometimes it's flooring it, right? And other times it's hitting the brakes before a big turn. Well, technical indicators are basically the dashboard on that race car. They tell you just how fast it's going and, more importantly, if it's about to run out of gas.
And the number one tool for this is the RSI, the Relative Strength Index. You can literally think of it as a speedometer for price on a simple 0 to 100 scale. What it's really doing is measuring the speed and size of recent price moves to tell you, hey, is this thing getting a little too hot or is it getting way too cold?
So here's how you read that speedometer. If the RSI goes above 70, that's what we call overbought. It's like the engine is in the red zone. The price has shot up so fast it might need to cool off or even pull back. But on the flip side, if it drops below 30, that's oversold. And for smart traders, that can be a massive signal, a potential prime buying zone right before things heat up again. Yeah, RSI doesn't ride alone. It's got a partner in crime called the MACD, which stands for Moving Average Convergence Divergence. Yeah, it's a mouthful. Just know this. While RSI checks the speed, MACD shows you the intensity and direction of the momentum. Using them together, that gives you a much clearer picture. Okay, so we've checked our speed. Now it's time to become a crypto weather wizard. I want you to start looking at charts like you're looking at clouds in the sky. You know how some clouds mean a storm's coming? Well, some shapes on a chart can signal a massive pump or a dump. It's all about learning to spot these powerful shapes. So, what are we hunting for? These are the big 4 you need to know. We've got the head and shoulders, triangles, flags and pennants, and the double bottom. Each one of these tells a unique story about the battle between buyers and sellers. Let's break them down. First up, the head and shoulders. This is a classic, and I mean classic, warning sign. You'll see 3 peaks. The one in the middle, the head, is the highest. When you see this shape after a big run-up, it's often a signal that the upward trend is losing steam and might be about to reverse. Next, we have what I call the coiling energy patterns. These are your triangles, flags, and pennants.
you'll see the price get squeezed into a tighter and tighter range. It's like the market is taking a quick breath, building up energy like a coiled spring right before a massive breakout in one direction or the other.
And then there's a huge one, the double bottom. You're literally looking for a big W shape on the chart. The price hits a low, bounces, comes back down to that same low, and then takes off. This is a super powerful bullish signal that suggests the selling is exhausted and buyers are about to take control. All right, you've got your indicators, your spotting shapes, but what's the missing piece? It's all about perspective. You need to master your time zoom. Think of it like a magnifying glass for the charts. You got to know when to zoom in for the tiny details and when to zoom out to see the big picture.
This is what separates the pros from the beginners, right? They look at multiple time frames. They'll start on the weekly or monthly chart to see the giant macro trend. Then they zoom into the daily chart to find good setups within that trend. And finally, they might use the 1-minute chart to pick the perfect entry point. When all the time frames are telling you the same story, your confidence goes way up.
Okay, to put all this into practice, you need a safe toolkit. And I got to stress this, be safe. Stick to the trusted names. TradingView is the gold standard for charting. CoinMarketCap is perfect for your research. Please, please, please avoid random apps you find online. So many of them are just malware designed to steal your crypto.
Let's gear you up with your pro trading arsenal. We've covered the skills. Now let's talk about the tech. Think of these as the final upgrades to your trading setup that can help you trade smarter, faster, and safer.
First up, wallet hooks. This sounds techy, but it's super simple. You can connect your Binance or Coinbase account directly to your charting platform. This lets you see your portfolio and even make trades without ever leaving your chart. It's a game changer for staying focused and acting fast.
Now this is where things get really cool. We're talking about your own personal AI trading assistants. You can set up smart alerts on TradingView that text you the second a pattern forms or an indicator crosses a line. And for the really advanced folks, you can even use bots that will trade your strategy for you 24/7. It's like having a secret weapon.
And we can't forget about defense, right? You need steady boats for the rough seas. And that's where stablecoins like USDT come in. They're your safe harbor during market storms. And for your long-term holdings, a hardware wallet is your magic lock. It keeps your keys offline where hackers can't touch them.
And there you have it. The speed checkers, the power shapes, the time zoom, the pro tools. That's the whole shebang. So now the big question is, how do we combine all of this? It's time to launch your moon mission.
This is it, your mission checklist. You're going to combine the Candlestick basics with these new advanced tools. You'll read the story, spot the shapes, and check the speed. Get on those free apps and practice until it's second nature. Always remember that dips can be massive opportunities, and that's it. You are now a chart master.
You are an absolute legend for making it to the end. Seriously. Now I want to hear from you. Drop a comment below and tell me your single favorite chart hack or the biggest thing you learned today. Let's build a community of chart masters right here in the comments.
And hey, if this helps you level up, do me a solid and smash that like button. Subscribe for more weekly crypto fire and make sure you hit that notification bell so you never ever miss a drop.
And you are not going to want to miss what's coming next. We're dropping Stop Losing Money on Crypto Trades, the only 3 chart indicators you need. We're going to simplify everything down to the absolute must-haves. Be there. And just a quick reminder, this is not financial advice. This content is for education and entertainment purposes only. The crypto markets are incredibly risky. Always, always do your own research. Let's go to the moon together, legends.